So let's see what is contingent liability. So contingent liability means it's a type of liability, which is a possible obligation that might arise depending on the outcome of uncertain future events. So it is not recorded in financial statements because it is uncertain, and the amount cannot be reliably estimated, but it should be disclosed through notes definitely. Okay, so here, this example, let's read the example. ABC Limited may have to pay 200,000 in a court case, but there is only 40% chance that they will lose. There is only 40% chance that they will lose. And should they record as a liability? The answer is no. Okay. This is not considered as liability because the outcome is not probable. Instead, it is possible, which means it is only 40% chance that they will lose. 40% in the sense it's possible. If it is more than or equal 50%, then it will become probable. So it is a contingent liability. So we should disclose it through notes in financial statements. So in second example, XYZ company is facing a lawsuit, which means a court case amounting to 500,000. So the legal team estimates a 30% chance of losing the case. How should the company treat this in its financial statement? Should it recognize as a provision or disclose it as a contingent liability? So here, it is not probable that a company lose the case. You see here, 30%. Okay, so it is a possible obligation, and so it should be treated as a contingent liability, and it must be disclosed through notes in financial statements. Okay, this financial recorded in recorded in financial statements as contingent liabilities. So second, let's see what is an contingent asset. What is an contingent asset? Here, contingent asset in the sense it is a possible asset that may come to business in future only if it is certain events happen. Only if certain events happen, and if it is not, and if it is not guaranteed, which means contingent assets are coming in future only if certain events happens and it is not guaranteed even. So here, let's see some examples and answers. A company expects to receive 200,000 from an insurance claim due to a fire damage. The insurer has accepted the claim, but the final settlement is pending. What is the accounting treatment, and should it be recorded as asset or treated as contingent asset? Justify your answer. Here in this section, 200,000 is considered as contingent assets. Even though insurer accepted the claim, it becomes certain. Right? Cannot be recorded until it becomes certain. So it cannot be recorded in financial statements until it becomes certain. Okay. So here, second one, a company has filed a lawsuit or else a court case against another firm claiming 1 million in damages. The company lawyers believe that there is a strong chance of winning the case. So they believe that there is a strong chance of winning the case, but the outcome is not certain, which means 1 million is a contingent asset because it is a possible future gain that will come to real if the court case is favorable. If the court decision is favorable, then it become contingent asset. So it is not recorded in financial statement, but it can only be disclosed in notes if the inflow is probable or it is virtually certain. So thank you for listening.